Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format, and apart from English PDF, we also provide them in Hindi format. And this Banking Awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF, and also Exam Perspective PDF will also be uploaded. Next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English, and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI Assistant Mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI Assistant Mains. Similarly, for SBI PO, RRB PO, Clerk Mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics.
Today, we will be covering November 4th week banking and finance awareness news. Moving to the first news. The first news is about SEBI. So, SEBI has directed quality stockbrokers to offer UPI mechanism 3-in-1 trading facilities. So, SEBI has directed all qualified stockbrokers to offer either the facility of trading in the secondary market using the UPI-based block mechanism to their clients, similar to the application supported by blocked account facility or 3-in-1 trading account to the investors. So, this new direction will be effective from 1st February 2025. Now, what is this 3-in-1 trading account? So 3-in trading account is a single platform that links 3 accounts, that is Demat account, trading account and a bank account. So this integration makes it easier to manage their funds, execute trades and transfer funds. So that is why SEBI has directed that this 3-in-1 trading account should also be available to the investors. Now, what are these qualified stockbrokers? So qualified stockbrokers, they are nothing but trading members which are classified as qualified stockbrokers because of their high volume. So it is based on various parameters like size and scale of their operation, number of active clients, the trading volume, the end of the day margin of all clients, the total assets held by the clients. So based on these criteria, based on these parameters, the trading members are classified as the qualified stockbrokers. Now, what is this UPI block mechanism? See, you know that this UPI block mechanism, it was introduced in January 2019 for the primary investors, for the primary market. So if you see, SEBI introduced the UPI block mechanism, which initially served as a payment member for the retail investors participating in the public issue in the primary markets. So in the primary markets, when the IPO is open, that time you can go to your stockbroker. Say it is Zerodha account. You have an account in Zerodha. So there you can mention a UPI ID, and then you can for the IPO that you are applying, you can choose the IPO, then mention the UPI ID. Then what will happen is that your account, your amount will be blocked in your account. So that amount, say the IPO is some 14,000. Then this 14,000 will be blocked in your bank account. Suppose you get this IPO allotted, then that time only this will be debited. Until then, it will not be debited and it will be present in your bank account. You will still be earning the savings interest rate, savings interest amount. Similarly, SEBI has told that this same concept has to be bought into the secondary market also. So that is what it has been introduced now. So in this case, what you see that, how do you buy a stock from the stock market? You have money in your account. You transfer in your bank account. You transfer it to your Zerodha account. And then from the Zerodha account, you initiate the trade activity. Either you buy or you buy the share from the stock market. This is how it's happening. So now what the SEBI has told that you have to directly buy from, instead of, just skip this step. That is uploading the money into the Zerodha wallet. Instead of that, directly from the bank account, it should go to the trade. So this step can be skipped, or it has to be skipped in this UPI block mechanism. So why this was introduced? It is because when you have money in your Zerodha wallet, you do not earn any money, right? Suppose you execute a trade, but that trade has not been executed. You have initiated a trade, but the trade has not been executed. In that case, you will have that money in your wallet. You will not be earning any interest for that money stored in your wallet. But if it is in your bank account, and this amount will be blocked. That is, you cannot use that amount. That amount will be available in your bank account, but you will not be able to use that amount. It will be blocked. That will be used for the trade if the trade gets executed. But even in that period, you will still be earning the interest. That is the purpose. That is why it has been extended to the secondary market as well. So this is the concept of this UPI block mechanism. Next is about a report that has been released by the RBI. So the Reserve Bank of India has released own sources of revenue generation in municipal corporations, opportunities and challenges. So this report completely analyzed the municipal corporation revenue and receipt. So if you see, this report analyzed the budgetary data of around 232 municipal corporations, covering over 90% of the India's total municipal corporations. So municipal corporations show surplus revenue accounts. They rely heavily on the transfers from the high government, limiting their financial autonomy. So revenue account, if you see, so it is surplus, which means that there is more revenue receipt than revenue expense. So revenue expense or revenue receipt, they are recurring. That is, it's like revenue expense in the sense you have to pay salary and all, right? So this is a recurring expense. That is, you have to pay the salary every month. Similarly, revenue receipts are also recurring. So maybe you have given a land, the government land to rent to some company or something, then you will automatically get rent. So that is a recurring income. So these are the if you see the main feature of revenue, receipt and expenses, that they are recurring in nature. And here in municipal corporation, the revenue receipt is more than the revenue expense, and that is why it is in surplus. So the municipal corporation revenue receipts, it rose by 20% year on year to 1.7 trillion in financial year 24 compared to 1.42 trillion in financial 23 and 1.37 trillion in financial year 22. The share of the own resources in municipal revenue receipt increased to 61.9% from 59.7%. So which means that apart from the own revenue, own resources, that is, they have generated that resources, that municipal corporation have generated the resources, and those resources are earning an income for the municipal corporation. But along with that, even the governments, the higher governments, they also provide grant to the municipal corporation. So this is also one of their revenue. So that is also provided to the municipal corporation, but this is not own resource revenue. Only this part is own resource revenue, and that is around 62% of the total revenue receipt. Municipal corporation revenue expenditure grew by 13.9% to 1.49 trillion from 1.31 trillion in financial year 23 and 1.23 trillion in financial year 22. So the consolidated budget of the municipal corporation shows a surplus, but it decreased from 4,914 crore in financial year 2020 to 1,034 crore to financial year 21. So consolidated budget means it is the budget of all the municipal corporation present in India. So if you see, it has been a surplus, but the decrease has been seen in the financial year 21 compared to the financial year 20. But if you see in financial year 24, the budgeted surplus is around 20,819 crore. The surplus in 2024 was budgeted at about 1,000 crore in few states like Maharashtra, Gujarat, Karnataka, Madhya Pradesh, Haryana and Telangana. So in these states, the budgeted surplus was about 1,000 crores. So it was led by Maharashtra with around 11,100 crores. Similarly, in few states, the budgeted surplus was around the 100 crore range. That is in Delhi, Andhra Pradesh, Rajasthan, Odisha, West Bengal and Tamil Nadu. So as of March 2024, the total municipal bonds outstanding at rupees 4,204 crores was just 0.09% of the total corporate bonds outstanding. So one of the way of generating revenue by the municipal corporation is via distributing municipal bonds. So municipal corporation, they issue municipal bonds. Through that also they generate certain revenue. So if you see, it is very, very, very small. The scope of this is currently very small. It is just 0.09, not even 0.1%, just 0.09% of the total corporate bond outstanding. So this shows that this is an area which has a lot of scope, and it is in its very rudimentary, it is in a very basic stage. So municipal corporation have to focus on increasing their municipal bonds because that is a very good revenue for them. Next is borrowings from the financial institution rose substantially from 2,886 crore in financial year 20 to 13,364 crore in 2024. So that is very, very huge. Just from 2,000, we have the municipal corporation has borrowed to around 13,000 in financial year 24. Odisha and Telangana Municipal Corporation reported the highest borrowing relative to their revenue with figure 14% and 15% respectively, which means that Odisha, it has borrowed around 14% of its total revenue. So the borrowing is quite higher. Out of the total revenue that they could generate, they have borrowed 14% from the financial institution, and in case of Telangana, it has borrowed around 15%. So the report also suggests that measures like geographic information system mapping and digital payments, they could improve the property tax collection. This is a scope for improving the revenue by the municipal corporation. So timely and direct transfers from the state government are vital for the municipal corporation financial stability, and regular formation and timely implementation of the State Finance Commission recommendation are also crucial for the proper state funding. So these are the various ways by which we can increase the revenue of the municipal corporation.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this static banking awareness course lays a foundation to the current banking and finance news. Now, you have to download our Careers Cloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about a data that's been released by the Reserve Bank of India. So Reserve Bank of India has released the external commercial borrowing data. So the net inflows through external commercial borrowing has increased from $6.8 billion in the first half of financial year 24 to $7.9 billion in the first half of financial year 25. So as per the State of Economy report, nearly 50% of the new external commercial borrowings registered during the first half of financial year 25 was intended for capital expenditure. So if you see, this external commercial borrowing is nothing but the commercial loan that eligible resident entities borrow from the non-resident entities. So these are like, startups, corporates. They all borrow funds from abroad, from non-resident entities, and use that fund for multiple purposes within India. So that is the data that's been provided, and this data, external commercial borrowing data, is tracked by Reserve Bank of India, and now they have released the data of this external commercial borrowing. So if you see, compared to first half of the financial year 2024, this ECB has increased from 6.8 billion to 7.9 billion dollars. And out of the new external commercial borrowing registered in the first half, 50% has been intended for the capital expenditure purpose, which is very good because capital expenditure helps in improving the infrastructure and also helps in improving the production. So that is a very good purpose. But if you see, there is a decline in the external commercial borrowing for the capital goods. Though 50% of the new ECB, not the overall ECB, but 50% of the new ECB have been intended for the capital expenditure purpose, but the overall decline has been seen in the capital goods. So ECBs for import or local sourcing of the capital goods dropped to 1.3 billion in the first half of 25 from 9.4 billion in the first half of 24. So what is the reason for the drop? The reason for the drop is that most of the money has now been shifted to the working capital and general corporate purpose. So if you see the working capital, it has been increased from 4 billion in the first half of 24 to 10.2 billion in the first half of 25. So this much has been increased in the working capital, and that is why you see a drop in the capex also. And new ECB loan registration and disbursement were around 14.3 billion and 12.8 billion respectively in the Q2 of financial year 25, which is higher than the previous quarter as also the previous year's first half. The Indian corporates, including the NBFC companies, they have filed ECB proposals with RBI to raise 4.8 billion, of which 3.77 billion will be raised through automatic route and 1.06 billion will be raised through the approval route. So we know that under FTI, there are two routes. One is automatic, another one is approval. So automatic is that you don't need specific approvals from the government departments. But here, approval is that certain sectors, they have a limit. So if you want to invest more than that limit, then you have to get approval from the concerned departments. Only then you'll be able to invest in that sector more than that limit. So that is what is being said here. So under the 4.8 billion ECB proposal, 3.77 billion is through the automatic and 1 billion is through the approval route. Next is that outward remittance under the liberalized remittance scheme dropped by 14.88% in the first half of 25. So the liberalized remittance scheme, it is, you know that the limit is 2,50,000 per resident. So if you see the outward remittance under this, that is people sending money through LRS outside, for two people outside India, that has dropped. Why? Because certain components of this LRS has dropped. So what are they? The remittance for the maintenance of close relatives decreased significantly by 37%, that is to 1.92 billion from 3 billion. And also it has observed that funds allocation in education, it has decreased from 1.84 to 1.6. International travel, it has decreased from 9.3 to 9 billion. Immovable property. So few resident of Indians, they also invest in immovable properties outside India. So that has also decreased from 150 million to 136 million. This, if you see, this is H1 of financial year 24 and this one is H1 of financial year 25. And also investment in equity and debt market, that has also decreased from 864 to almost 700 million. So these are the various components of the LRS where the amount has decreased, and that is why the overall LRS has also decreased by around 15%. Next is gross FDI in India rises 25% in the first half of 25, but net FDI moderates. Now, what is this gross FDI and net FDI difference? See, gross FDI, we know that the investment by the foreign entities into India. Then what is this net FDI? So what do we subtract from the gross FDI to derive at the net FDI? So this is nothing but the outside FDI from the resident of Indians. So people who are residing in India, the Indian corporates, they make foreign direct investment outside India also. So that is one component that is subtracted from this gross FDI. Second one is the repatriation. So people who have already invested in India, the FDIs who are already invested in India, they may exit the position or they may sell certain investment alone and they may exit. So that is called as repatriation. So that may also happen. So due to these two components, that is people in India investing outside India and repatriation. So due to this reason, the net FDI has come down compared to the previous year. So if you see the gross FDI in India, it has increased by 25% from 33 billion to 42 billion. But if the net FDI, it has moderated to 3.6 billion from 3.9 billion. So the repatriation or disinvestment by investors who had made direct investment in India has increased from 23 billion to 27 billion, and the outward FDI during the first half of 25 increased to 10 billion from the 6.5 billion. So this is the two reasons for the decrease in the net FDI, that is net repatriation and outward FDI. And also if you see, India has emerged as a leader in the artificial intelligence. India has ranked among the top 6 global economies in terms of investment in generative AI startups. So this is a great news. Next is that NRI deposit inflows surged nearly double. So if you see the NRI deposit inflow, it has reached almost 10 billion compared to 5 billion previous year. And the headline inflation, it has increased by 70 basis points, that is from 5.5% to 6.2%. The main reason for this increase is the food inflation. So food inflation, if you see, it had increased to 9.7% in October 2024 from 8.4% in September 2024. So the main reason for the increase in the headline inflation is the food inflation. Also, the Indian rupee appreciated by 1.8% month on month in October. The next news is about SEBI. SEBI abolished 1% mandatory security deposit requirement in public issue. So if you see, what is this 1% mandatory security deposit? So before a company goes for a public issue of shares in the stock exchange, they have to make 1% of the total amount of public issue as deposit to the stock exchange. So say suppose the company is going for 1,000 crores of public issue, then it must make a deposit of 10 crores. It has been mandatory till now, but now this has been removed. Now why this deposit has to be made? In case if there is any wrong issue, wrong allotment has been done, or if there was any customer complaint from the customer, any refund has to be done. If a refund has to be done to the customer, using this amount, the stock exchange will do the refund. So that was the purpose of this 1% mandatory security deposit. Now this 1% mandatory has been taken due to the technological advance like block the amount and also UPI. So there are almost no nil chances of these faults or of these wrong deeds occurring. So that is why they have taken this 1% mandatory security deposit now. To abolish the earlier requirement mandating issuer companies to deposit 1% of the public issue size with stock exchanges before launching a public issue. So earlier, any company seeking to launch a public issue of equity shares has to deposit with the stock exchange an amount equal to 1% of the issue size. SEBI initially introduced the 1% security deposit rule to ensure company address common investor complaints like refund delays, incorrect share allotments, and issues with dispatching physical share certificates after public or rights issue. The regulator noted that the current reforms and framework for public or rights issue, including the ASBA, UPI payment method, and mandatory demat allotment, everything regarding the investor complaints, refund, and physical certificate distribution are no longer relevant. So all these are no longer relevant compared to the current reforms and framework. It has directed stock exchanges to notify all listed companies of the changes and publish the circular on their respective web portals. Next is Jammu and Kashmir Bank launches virtual ATM facility with the Paymart India. So Jammu and Kashmir Bank has launched this virtual ATM facility in collaboration with this Paymart India Private Limited. So this will help to enhance the financial empowerment of people, especially in rural areas with deficiency of ATMs. The platform was inaugurated by the bank's MD and CEO Baldev Prakash. Now, what is this virtual ATM? So now if you see, it is the Jammu and Kashmir Bank and Paymart. Together they have partnered for this virtual ATM. So how does this actually work? First is that the customer, he or she must have the mobile application of this bank. The number of this mobile application, it has to be registered with the bank. Then afterwards, they have to log in and initiate the withdrawal request. After they initiate it, they will be able to see the list of merchants. So who are the shopkeepers who are in tie-up with this Paymart Private Limited, all that list will be able to view in this mobile application. So the name, the address, the phone number, so all these details of the merchants or the shopkeepers will be visible in this mobile application. If they are in tie-up with this Paymart, then they have to initiate that request. One OTP will be generated to the registered mobile number. Now what the customer has to do is take this OTP and go and visit the shopkeeper and provide this OTP to the shopkeeper. The shopkeeper will provide the money to the customer. So this is how this virtual ATM plays. So this is very helpful in scenario where it is very difficult to have an ATM. In that case, this virtual ATM plays a vital role. Next is RBI increases the UPI limit and the UPI 1, 2, 3 pay limit. Now we know that UPI Lite is for small value transaction. So it was observed by the NPCI, National Payment Corporation of India, that almost 80% of the UPI transaction were of smaller value. Smaller value in the sense 500 or 200, like that only. Most of the transaction, almost 80% of the transaction were like this. So they then realized that it's better to have a wallet where the money can be preloaded and then transaction can be made from the wallet. So by this, the time of the transaction reduces because it doesn't have to hit the server for every transaction, and also the energy. So every time you hit the server, obviously some energy is used, right? So that will also be served. That will also be reduced. So that was the main purpose of this UPI Lite. Now this UPI 123 Pay is for feature phones. So people who are not using smartphones, they also deserve this UPI facilities. So for them, this UPI 123 was introduced. Now the RBI has increased the maximum limit of the UPI Lite and UPI 123 Pay limits. So UPI Lite is a new payment solution that leverages the trusted NPCI Common Library application to process low value transactions that have been set at below 500. And UPI 123 Pay allows feature phone users to make digital payments without needing an internet connection. So increased limit, if you see UPI 123 Pay, it has been increased, that is the maximum per transaction limit has been increased from 5,000 to 10,000, and UPI wallet has been increased from 2,000 to 5,000. So as I told you, there will be a wallet in which the money will be stored, and from that the transactions will be made to the merchant or the P2P. So previously the maximum value that could be stored in the wallet was 2,000. Now it has been increased to 5,000, and the maximum per transaction limit also has been increased from 500 to 1,000. The UPI was officially launched on April 2016 by the National Payment Corporation of India. Bhutan was the first country to adopt UPI in July 2021. Next is about GDP projection. So Goldman Sachs Group has projected India's GDP to decline to 6.3% year-on-year for the current year, for the calendar year 2025. It has estimated that 25 basis points repo cut is expected in February 2025 and followed by another 25 basis point cut in April. So we don't know if this will happen or not. As the time goes, we'll be able to know if it's happening or not. So it has projected that India's current account deficit will be at 1.3% of GDP in the current year 2025. The Goldman Sachs has projected that headline inflation to average to 4.2% in the current year. So remember, the GDP projection is 6.3%. The headline inflation is 4.2%. Next is S&P. According to the S&P Global Ratings, India's GDP is projected to grow between 6.5% to 7% annually in the next 3 fiscal years, that is between financial year 25, 26 and 27. It forecasts annual growth of 6.7% if suppose 6.7% growth is realized, then India is set to become the third largest economy and transition to the upper middle income category by the financial year 2031. So currently we are in the lower middle income category. So if we reach, according to this projection, if we reach an annual growth rate of 6.7%, then we can become the third largest economy by 2031, and we can also side by side transition to the upper middle income status. The next news is about India's GDP projection. So the India Credit Rating Agency Limited, it has projected that India's real GDP, it will go down by 6.5% in second quarter compared to 6.7% in the first quarter. So the growth in second quarter is comparatively going to be lesser than that happened in the first quarter. For the overall financial year 25, it is expected to grow at 7%. So if you see, the government of India's capital expenditure reverted to year-on-year expansion of 10.3% in Q2 financial year 25. This means that we have spent 10% more than the Q2 of the financial year 2024. And following the contraction of 35% in Q1 financial year 25. So why is this contraction? Why is that we have spent lesser than 35% of compared to Q1 financial year 24? That is the main reason is election. Since the election was taking place during that quarter, no big capex was done. So that is why this contraction was observed in the first quarter of the financial year 25. Next is the partnership between the IndusInd Bank and the UNICEF. So IndusInd Bank and the United Nations Children's Fund, that is the UNICEF, they have partnered to enhance the disaster resilience and climate risk management through the initiative called Disaster Resilient Communities and Climate Risk Informed Efficient Administrative System. So this system they have established. This system is established by IndusInd Bank and the UNICEF. So in addition to the IndusInd Bank and the UNICEF, the program involves key stakeholders such as CSR Trust for the Sustainable Development Goals, Tufts Clinical, Translational Science Institutes, and IIT Gandhinagar, and Gorakhpur Environment Action Group and Mission Samriddhi. So these are the various other players involved in this initiative. So IndusInd Bank MD and CEO is Sumant Katpalia. It was the headquarters is in Mumbai. It was established in 1994. Tagline is "We make you feel richer." UNICEF CEO is Catherine Mary Russell, headquartered in New York, and it was established in 1946. Next is RBI has cancelled the license of Durga Cooperative Urban Bank Limited, which is situated in Vijayawada, Andhra Pradesh, that had been operational for over 95 years. So now this bank cannot do any operation. It cannot accept deposit or provide loan. Its license is cancelled. So now the depositors will be returned 5 lakh rupees from the DICGC. So depositors are eligible for compensation up to 5 lakh from the Deposit Insurance and Credit Guarantee Corporation. So recently, if you see, there was a portal launched by the Reserve Bank of India to track the claim status. So what is the name of that portal? Next is a memorandum of understanding that has been signed. The Reserve Bank of India and the Maldives Monetary Authority, they have signed an MOU for establishing a framework to promote the use of local currencies, that is Indian rupee and Maldivian rupiah, for cross-border transaction. So to increase the rupee or the other currency transaction, this MOU has been signed. So this aims to boost the use of INR and that Maldivian rupiah in current account transaction and also in permissible capital account transaction. Current account here, it includes import, export, and capital account includes the investments like the FDI investment and all is a capital account transaction. So in permissible capital account transaction, this use of INR and rupiah will be used. So memorandum of understanding would allow the exporters and the importers to invoice and settle in their respective local currencies. Next is that IndusInd Bank Limited and Bharat Financial Inclusion Limited, they have partnered with the Ministry of Agriculture and Farmers Welfare to launch Bharat Sanjeevi Krishi Uttan Initiative. The name is Bharat Sanjeevani Krishi Uttan Initiative. So this initiative, it aims to support the formation and promotion of 10,000 farmer producer organization. So this FPO, it is a central sector scheme that aims to boost agriculture productivity and profitability, particularly for the marginalized farmers. So marginalized farmers, if you see, they own very small hectare of lands. So when you group certain farmers together, when you group more than 5 or 10 farmers together and form this FPO, their bargaining power, their leverage of economies of scale, their cost of production, overall it will reduce. So this will benefit the farmers. It will enhance the farmers' income through aggregation of their agriculture produce. That is the main purpose of this FPO. That is to organize the farmers, to make them come together. That is especially the marginalized farmers who own very small hectare of lands, so that their bargaining power will increase, and they also will their cost of production will also reduce and their income will increase. This is the main purpose of this farmer producer organization, and we plan to establish around 10,000 FPO. The next news is about India's GDP projection. So according to the global rating agency Moody's rating, India is expected to grow at the rate of 7.2% for the calendar year 2024 and 6.6% and 6.5% for the calendar year 25 and 26. Similarly, for the G20 emerging economies, it is expected to grow at 4.3% in 2024 and 3.9% in 2025 and 3.8% in 2026. So we saw that for Indian economy, it has projected 7.2%, then 6.6%, then 6.5%. Do remember the GDP projections. It is very, very, very important. Next is Germany-based investment bank and financial service company Deutsche Bank announced the investment of additional 5,113 crores into its Indian operations. So what it will do with this much amount of money? It will be used at expanding various business sectors such as corporate banking, investment banking and private banking. So remember the amount, it is 5,113 crores invested by the Deutsche Bank into the India operations. Next is State Bank of India in partnership with APIX. It has launched a platform called SBI Innovation Hub. So this Innovation Hub will connect the financial institutions and the fintechs. So this was launched during the Singapore Fintech Festival. So using this hub, what is that? The fintechs, they can provide solutions to meet the digital needs of the SBI customers. So this will be a chance to the fintech companies, the growing fintech companies, to prove their own innovations, and also by proving their innovations, they can also get partnership with various leading banks. So this is a opportunity for the fintechs. So remember, it is SBI and APIX together. They have launched this SBI Innovation Hub. Next is that Reserve Bank of India has added 10-year sovereign green bond to the list of specified securities for the non-resident investors under the fully accessible route. So we know the sovereign green bonds, they have been raised. They are raised to get funding for the renewable energy sector. So to improve the environment, to invest in projects that improve the environment, this sovereign green bond has been raised. So this money that has been generated using the sovereign green bonds will be invested in renewable energy projects or also environmental friendly projects. So this, if you see, the non-resident can participate under the fully accessible route, which means that they do not have any limitation. That is, they can invest how much ever they want into these bonds. That is what this fully accessible route means. So it will help to raise capital to fund sustainable initiatives for the public sector projects. The Government of India plans to raise rupees 20,000 crore in green bonds in 4 tranches. So it will have 2 10-year bonds and 2 30-year bonds. So here this 10-year and 30-year, it means the tenure, the maturity period. So 2 10-year maturity period and 2 30-year maturity period, each valued of 5,000 crores. So this fully accessible route was introduced in 2020, allowing the foreign portfolio investors and also the NRIs and other eligible investors to buy the specified government securities without investment limit. The RBI has issued a total of 36,000 crore in green bonds since 2022-23. So if you see, this was introduced in 2020 and there is no limit. Fully accessible route means they do not have any investment limit. Next is launching a co-branded credit card. So the fintech company Rio Money and the Yes Bank and NPCI, National Payment Corporation, together, they have partnered to launch the Yes Bank Rio RuPay credit card. So it is fintech company Rio Money, Yes Bank and NPCI. All these three have partnered to launch this Yes Bank Rio RuPay credit card. So Yes Bank MD and CEO is Prashant Kumar. It is headquartered in Mumbai. NPCI MD and CEO is Dilip Asbe and is also headquartered in Mumbai. So next is about Government of India. It has released second tranche of $2.5 million to the United Nations Relief and Work Agency for the Palestine refugees in the Near East. So India has provided cumulative financial assistance of around $40 million to this UNRWA over the years. So now it has released the second tranche of $2.5 million. But if you see, overall, India has provided a support of $40 million. So in October 2024, India supplied 30 tons of essential medicines, including life-saving and anti-cancer drugs, to address the health issues of the Palestine refugees. So the UNRWA, that is United Nations Relief and Work Agency for the Palestine refugees in the Northeast, in the Near East, it is a United Nations organization dedicated to providing relief and support to the human development of the Palestine refugees. It was established in 1949 by the UN and it became operational in 1st May 1950. The Commissioner General is Philip Lazzarini and it is headquartered in Amman, Jordan.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact directly on this number. Thank you.